What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today a new Bitcoin-only ETF started trading in Canada. Today's Thursday, February 18th, and at the same time, Bitcoin is, as of right now, trading at all-time highs, above $52,000 just about. And so today we're going to be talking about, number one, what are some of the benefits with having this new ETF that's Bitcoin-only trading in Canada? What are some of the hurdles that the United States still faces, some of the problems that the United States still faces that this ETF doesn't actually solve? And then we're also at the end going to talk about some new risks that Bitcoin investors face. Ready? Let's dive in. All right, guys, so two quick housekeeping notes here. Number one, last night, first members only live stream. It went fantastic. Again, like I've said, it's a very small group, so it's a question and answer kind of format and largely driven by questions of portfolio allocation or trading or, investing in certain sectors or outlook. And it's very, very personalized, and it's a very small group. So if you're interested in joining that, hit the join button. It's next to the subscribe button. You can also find the link in the description, and it's that $25 a month. You get once a month, you join the live stream with everybody, and we have a nice conversation about any questions that you have regarding finances or questions or investing or trading or anything like that. Second thing, for those of you who haven't seen already, I've now launched a podcast version of this YouTube channel. So I know a lot of you, most people don't pay for the YouTube premium service, which means, number one, you don't get ads on that. But number two, on most devices, you can't keep on listening to the audio of a YouTube video when the device is shut off. It just pauses or stops the video. And if you pay for YouTube Premium, that changes. You can do that. But because I wanted to make the audio of these YouTube videos available, I have just started taking the audio and pushing them out as a podcast. It's on all major podcast platforms: Castro, Google Podcasts, Spotify, Apple Podcasts, any of the main podcast players and services out there. You can find it. It's called the Heresy Financial Podcast. So just look it up, and you can find the audio versions of all of my YouTube videos will start getting posted there. Okay, so Bitcoin ETF starting to trade in Canada. Benefits. Number one, ease of access. So anytime you you democratize access to an asset, that is going to have the effect normally of bidding up the asset price. That's one of the reasons why stocks have risen so much over the past few decades, is because it's quite a lot easier to invest in stocks today than it was 50, 60, 70 years ago. The industry has democratized investing in stocks, and it is far easier. The threshold to get money into stocks is far lower than it's ever been in history. And so anytime you have moves like that, whether it's from technology, whether it's from laws, whatever it's from, that makes it easier for people to invest in a certain asset class, that's going to have the effect of pushing prices up. And so we're seeing some of that happen with private investments that are not publicly traded. You're seeing new websites and new tools and new laws unrolled to allow non-accredited investors, which by and large hold a large percentage of the money in the system. You're seeing a lot of doors open to get non-accredited investors access to invest in non-publicly traded companies. So that's going to, on average, is more money coming in, supply and demand, right? That's going to bid prices up. Same thing is happening with real estate right now. You're starting to see a lot of new platforms open up that allow it to make it much easier for people to invest, like in single family properties through websites like Roofstock, which I've talked about before. You see syndication companies, and you see other platforms where you can just put, $10, $100, $500 in, and it puts it into kind of like a basket of real estate. So lots of things like this. When you democratize access to something, you're going to bid the price up usually. That's what's happening right now with Bitcoin. As this ETF got approved, it's making it easier because it's easier to trade an ETF. By and large, you have more access to it in more accounts than you do with something like a trust like GBTC, which brings me to some of the hurdles. So other than the Bitcoin price impact of potentially providing a little bit of a boost, the ETF approval in Canada is not going to have that big of an impact, especially in the United States or outside of Canada. The big news is going to be when the United States approves an ETF. And the reason for that is specifically because the SEC has different rules that govern ETFs versus trusts. GBTC is a trust. And there's more investor protection provided under ETFs. Investment managers right now, they're not touching Bitcoin because you have to jump over some hurdles and go through some hoops for you to be able to, as an investment manager, as a portfolio advisor, as an investment advisor, to be able to put your clients' money in Bitcoin. As soon as a real pure ETF, Bitcoin ETF, is approved in the United States by the SEC, that opens the floodgates. Any investment manager out there, any investment advisor, any portfolio manager who wants to can put their clients' money in Bitcoin, since it would be held underneath an ETF. There's a big difference legally there, and so that's what we're looking for. That's going to be the key on the Canadian one is great. It's not going to have near as big of an impact. Also, in other news, GBTC as of right now is down 2.5%, 2.5% GBTC is down on the day, while Bitcoin is only down 0.07%. And so that highlights what I've talked about on this channel in the past, that GBTC will get crushed as soon as a US ETF is approved, because GBTC trades wildly around its net asset value, sometimes over 20, 30, 40, 50% above, and it goes below as well. And so you could very easily see a massive flow of assets out of GBTC because it's more expensive and more volatile than Bitcoin is once an ETF is approved, and all that money would flow into an ETF. And so the net investment in Bitcoin doesn't change because all those dollars are coming out of GBTC and going into the ETF. So the underlying asset doesn't change. So let's say it stays the same. GBTC would drop because of its net asset value, or because it trades wildly. It's way more volatile than Bitcoin is. So that's a big risk with investing in GBTC. Along with the rise in Bitcoin over the past couple days, couple weeks, couple of months, we're seeing two new risks show up in Bitcoin that I want to highlight for you, because not a lot. Some people are talking about this, but not a lot of people. So there's two types of risk. There's portfolio risk and there's adoption risk. And I'm kind of like coining these terms for this video, just for explanation purposes of what I'm talking about here. They're not like real legit terms here. And so if you Google these, like if you Google adoption risk, you're probably not going to find anything about Bitcoin. You're probably going to find stuff about adopting kids. And so you're not going to find anything on Google about this. Portfolio risk. Back in October, I started talking about putting 5% of your money in Bitcoin. Bitcoin was around $10,000, $11,000 at that point. And the reason why I said 5% was pretty simple. It was an asymmetric bet at that point. You could lose 5%, right? Because if it goes to zero, you lose everything you put in. You only put in 5% of your portfolio, so you lose 5%. It's not life-changing. It sucks, but it's only 5%, right? If it goes up to the potential that it looks like it could go up to by like upside potential, I'm talking like 400,000. That's about what it would be if like the minimum it would have to be if it was kind of used as the base money, used as the reserve currency, used as a store of value, widely adopted pretty much everywhere. And that's assuming some fractional reserve going on. It's not, fully reserved. If it was fully reserved and the money for everybody, then it would be, upwards of $1 million. But 400,000 was kind of, minimum best case scenario there. And so if that happens, the best case scenario, then if you had put 5% of your money in back in October, then you triple your portfolio if that happens. So the upside is triple your portfolio. Downside is lose 5% of your portfolio. That's a fantastic risk to reward ratio. Now, though, the price has gone up. And as an investor, when the price goes up, it hurts your risk to reward. The downside potential is always going to be your worst case scenario. It's not the likelihood of something happening. So an example of this, let's say, Bitcoin goes up a lot, or any investment. If your worst case scenario, if that asset goes to zero, let's say you lose 60% of your portfolio because you've got, at this point, let's say 60% of your portfolio in a single asset. But the upside potential is maybe you're expecting it goes up another, 20%. And so for your portfolio, your best case scenario is, about 10% gain. That's not a good bet. Your downside potential lose 60% of your money. Your upside potential gain 10%, that's not a good bet. That's blow up risk. That's what hedge funds do, and that's what this is what the people who are shorting GameStop are doing, right? Your upside potential was if GameStop goes from 5 to 0, because they were short. They could gain $5. Their downside potential, their loss potential is unlimited if it goes up, and it went up to $350. So what if they had to cover at $350? They lost $350 and only stood to gain $5. That's a horrible bet, right? So we don't want to expose ourselves to blow up risk. And the higher price Bitcoin gets to, the worse your risk to reward ratio gets, right? Because if you're targeting 400,000 as your top that Bitcoin can get to, and it's currently at 399,000, then you're basically there. So you stand to lose a lot more now than you did when it was around 10,000. So from a portfolio perspective, from an investor perspective, your risk increases as the price increases. Most people don't think that way. Most people think that if it's going up, that means it's a better bet. You've got more, cushion before you start losing money. But there's no real such thing as an unrealized or a paper loss. Everything is real, live in time. That's just mental accounting. And so the higher something goes, the higher risk becomes, because you have more to lose and less to gain, because it's closer to its full upside potential. All right, so then the second risk is adoption risk. And so this is why people say that as Bitcoin goes up, the risk actually decreases, because the longer Bitcoin exists, the longer its likelihood is of staying around. This is the Lindy effect. And so if you look at something like the Great Pyramids, they've been around for 3,000 years. The likelihood that they'll continue to be around for 3,000 years is pretty high, right? Because the world has thrown a lot of natural disasters, a lot of political changes, a lot of wars, a lot of, everything that it can think of, and the pyramids are still here, right? So there's probably not a lot left in the bucket that it can throw that would take down the pyramids if it hasn't already. Versus your house that was built 20 years ago. There's a lot left in the world that has not yet been thrown at that house. There's floods, there's blizzards, there's, wars, there's political changes, there's, all sorts of things. So the likelihood is that the pyramids will outlast. So the longer something exists, the higher likelihood it has of existing into the future. Similarly, the higher the price of Bitcoin goes, that's a direct indication of adoption of Bitcoin. And so as the adoption increases, it's a network effect thing. And so there's a higher likelihood that it will continue to be adopted by more and more, because of fear of missing out, and because of network effects, and because of the price itself just going up means that at least allocate a little bit from a corporate treasury amount, from an insurance perspective, so there's lots of factors here, but that's what people are talking about when they say the adoption risk. So as the price goes up, your risk actually goes down from the perspective of it just going to zero. The likelihood that it goes to zero decreases as the price goes up. And the problem, there's a problem with that. And that's why I say this is a risk. It's because the more sure something gets as a bet, if it's a sure bet, the more it becomes a sure bet, the more conservative that investment becomes. A conservative investment has a low likelihood of failing, a high likelihood of succeeding, and a very small payoff. So think of the dollar or a treasury. Those are considered to be very conservative investments because their likelihood of failing is low. But the payoff then is very low as well. Their likelihood of succeeding is high, so their payoff is very low, like a CD. It's guaranteed, right? It's not going to pay you anything, though. And so the more of a sure bet Bitcoin becomes, that's a direct correlation with how high it gets in its price. That means that it's a more conservative bet. Its upside gets lower, its downside potential gets higher. Even though that downside potential might get less likely, the downside potential still becomes more. So because of this, I'm still anticipating a run to about 250,000 this year because of the stock to flow model. And keeping that in mind, personally, I'm looking at my personal risk, the higher it goes. And so the higher it goes, the more and more I'm thinking of taking some off the table, taking some profits off the table, decreasing risk. Not yet, still holding, still stacking as well. But that's something that I'm keeping in mind as it goes up, because from a portfolio perspective, risk does increase the higher something goes. You stand to gain less, you stand to lose more. Still some great fundamental foundational drivers that are pushing Bitcoin higher, especially into the near future. And so 2 recommended ways that I like to invest in Bitcoin. Number one is stacking sats, right? Because it's super volatile. And if you don't know what stacking sats is, it's another word for dollar cost averaging. It's the Bitcoin community's word for dollar cost averaging. It's, every day or every week or every month, you put a set number of dollars in. And if the price is lower, then those dollars will buy more sats, which is a fraction of a Bitcoin. So you'll buy more Bitcoin when it's lower because it's a same set dollar amount. You'll buy less Bitcoin when it's higher. So overall, as it's volatile, you'll have a lower average cost. That's dollar cost averaging. And so the more frequent you can do that, the better, because Bitcoin is so volatile intraday. And so, I like to do every week. So I buy Bitcoin every single week. And I like to use Swan Bitcoin for that. It's extremely cost effective. They're hyper focused on security. They're only Bitcoin. They're not a crypto platform. It's just Bitcoin. And they do auto transfers to your wallet of choice. So I really like Swan Bitcoin. I've got them linked in the description below. The second way I like to invest in Bitcoin is in a retirement account. And I know everybody says not your keys, not your coin, but if you hold it in a retirement account, number one, it's shielded from taxes. That's a huge deal. That's a huge deal, especially with how high up Bitcoin could go. So having some in your retirement account shields it from any tax implications, which is fantastic. Second, it's non-correlated asset, right? And so it gives your portfolio a little bit more diversification. And the third thing is holding it in an IRA protects it from like the $12 wrench attack, right? And so I like having most of it in my own possession, but for diversification purposes and for an extra layer of security and having things spread out, it's fantastic to have some in an IRA. And I use iTrustCapital, again, hyper-focused on security. They're the easiest and cheapest self-directed IRA that I've ever used. I love them. Fantastic user interface. And bonus, you can invest in physical gold and silver through their platform at iTrustCapital as well. So I like both of those for my Bitcoin investing. So that's all for today. I really appreciate you guys. Thanks so much for watching. Have a good day.